Good Friday, traders. Happy Friday. It is 8 a.m. Chicago time on the 16th of June, 2023. Thanks for joining me. A quick sound check, please. That would be great. This is episode number 2485. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Well, it is Triple Witching Friday today. Um, we have options expiring at the open at 8:30 Central. We have options expiring later in the session. Um, we have futures that have rolled and are expiring, and so on and so on and so forth. So the what you'll see today is that the June index contracts will converge on the price of the SPX. They move to being the same price as the SPX as they get delivered as SPX contracts financially. Um, and then you have folks who are holding options positions across the board near really critical levels here, who are likely to need to hedge their delta and hedge their gamma today on the options they're holding. So today, traditionally, all of that, I'm giving you those details to let you know the background or the context of the fact that today generally is a pretty choppy kind of wishy-washy type of day, and generally the action stops quite early. But I will caveat that by saying that this week's roll was very unusual to have such a big breakout and trend on the roll, with the roll being delayed quite a bit. The roll was very slow moving Monday, Tuesday for the indices, and then it picked up dramatically after the CPI and then again after the Fed to catch up and then be done by Thursday morning. So everything is back to normal. We're on the September contract, and we've back adjusted our data, and all is good. This morning's risk posture in the market is mild risk on. The ESNQ and other products are just not giving up their the highs of yesterday. They're not giving up any of the highs that they're achieving. So this is just a short, kind of a short bias traders kind of nightmare here, especially if you're swinging. And I'm the worst person to talk about swing trading. I've never done it and I don't get it, but I understand. Uh, Bank of Japan holds rates as expected and parameters for QQE with YYC maintained. Bank of Japan Governor Ueda. More time needed to meet Bank of Japan's 2% inflation target. ECB's Wunsch. ECB would hike in September unless there's substantial drop in core inflation. ECB's Centeno monetary policy on restrictive terrain, not supportive to growth, must act to control inflation. Fed's Waller. Back to the U.S. Right now, everything seems to be calm in the U.S. banking system. Binance is reportedly under investigation with France. Within France, has been accused for aggravated money laundering. Aggravated. Wow. Okay. Adobe tops quarterly results and forecast estimates driven by AI. And Goldman Sachs is under investigation by the SEC as well as the Fed, I think, is the headline yesterday for its role in the crash of SVB, the bank that imploded earlier this year. So, other than that, this morning, what do we have? We had the inflation rate out of the Eurozone came in at 6.1% as expected, the prior 7, so it's cooling. Month on month, final 0% inflation as expected. Labor cost up 5% versus 3.3%. And wage growth of 4.6% versus 3.3%. CPI out of the Eurozone at 123.15. The forecast is in line. And that's it. Really, from this morning, we got the inflation rate out of Italy. It's 7.6% in line. And then we're looking for a Michigan sentiment prelim at 10 o'clock Eastern today, with Feds barking at 9. The Michigan sentiment number, the prelim number, is a mover. It has an inflation component. The consumer sentiment prelim is looking for 60 as the target, so keep that in mind. 60 at 10 o'clock. It's the inflation expectation is 4%. The prior is 4.2, and current conditions looking for 65.5. Uh, and then we get into Baker Hughes. We also have ECB's Lagarde later on. So that's expecting this to be a relatively muted session, but also the bulls are just not giving in here. The S&P this morning, 211,000 contracts, pretty decent action in the overnight session. Some relative numbers I'm going to give you here. Relative range. The current range at this time relative to the mean of the last 20 sessions at this time, the relative range is at 109% in the S&P. So we've got 24.75 points. So that's 9% more than the 20-day mean at this time. Relative volume is at 106. The NASDAQ is running at a relative range of 116% versus relative volume of 104. The Russell is below at 82% of relative range and 92% of relative volume, and the Dow's a sleeper when it comes to the range, 76% relative range today versus the last 20 sessions at this time. But the volume is relatively high, but the volume during expiration and roll, the volumes are generally elevated, and they've been elevated all week. 126% in the Dow. And the yen is heaviest today, 178% in range for the yen futures and 131% in volume. So there's that gives us an idea that there's pretty good activity there. The inventory's pretty much balanced to plus 1%, and the range is 24.75, and now we've moved the overnight point of control to 44.75. So the overnight point of control and the point of control in general has been shifting up, and that immediately tells us that the market is accepting higher prices. Yesterday's point of control, by the way, in the ES was 44.77, something like that. If I recall, I think the 77.78, and the overnight point of control at 44.76 basically. And what does that say to us? It says that the overnight session is just cozy and loving. Yesterday's acceptance despite the trend. So what this is saying is the overnight session is accepting where the market traded the most yesterday by volume, which brings us into a market that's relatively strong, balancing at the upper end of the range of yesterday. So here are the charts. The charts. Let's go to it. So here we have it. Yesterday's point of control right up there. Today's point of control right up here. Quite a bit of lifting off of VWAP. Off of VWAP this morning and off of the European numbers. I'm not saying that that's the cause, but there was quite a bit of very large lot activity bringing us to the high of the session this morning, which coincides with yesterday's weak-ish high. Yesterday we put in this almost like a double top high at 85.50. We went to 85.50, tapped on that a couple times, and then we went back and went to 84 and a quarter. just right there, it happened to flip to the 2 o'clock central hour, giving us almost a double TPO high. But in either case, you could see quite a bit of volume at the high there yesterday, and we're back there. So what are the key things we need to keep in mind today? Very simple. There are some key levels that I want to discuss with you this morning. Let's zoom in to what we've got here. This should be green. Okay, let's zoom into what we've got. So the first key test that we want to pay attention to today is this 4467 area right here. So 67 is the lower, I don't want to call it LIS, but it's like the lower boundary we want to pay attention to. And then the high of 85.50 is the upper boundary. We're opening right in balance here of the upper distribution of yesterday. Yesterday had multiple distributions. You can see there's a distribution there, there's a distribution there, there's a distribution there, there, and there. Active price discovery yesterday. We ended up playing scenario 1, and I'll go over that in a minute. If you recall, we were there. We discussed scenario 1 and the likelihood of the market kind of throttling up and pushing through as soon as it took out the LIS in the overnight session of 44.14.15 area or so. I don't recall exactly, but today, if it gives up to 67, I do have this area down here at the 56.50, which is the former swing high, if you recall, 56.50 to 57. Okay, that becomes the next kind of key test area. And then if it gives that up, the really important price it's got to hold today or this morning is the 44.47. So 47 here. As long as the 47 stays intact today, which coincides with the mid-century at 44.50, as long as that stays intact, the buyers are likely to continue to be in control and still have an opportunity to buy the dip on a pullback. But early indications that there's some weakness is a give up of the 67. We're currently trading right up here in real time. Well, as real time as YouTube allows, which is about 10 or 15 seconds delayed. 44.80 here. To me, this looks like it is very likely to chop in here and throttle even higher, and even higher than here. The key area to retest is of course 85.50. But if you go back in the composite, you'll find 4,500 above, and you'll find 45.03 above from a profiling perspective. And this cleans up the entire April, late April drop. The entire April drop and just kind of cleans it up and brings it back into balance. And then from there, we'll switch to the other chart to look at those levels. But this is what I've got in terms of a map, right? 67 is the area to monitor. This is the price that held into the close. You could see, pretty good structure, a low volume node here, very clear boundary for the upper distribution. If it gives up the upper distribution, then the boundary for the next one. And that's what's nice about these trend days, is you see the auction very, very cleanly on those days. Then the next boundary becomes 56.57. You don't want to trade in the middle of that. And if it gives up to 56.57, we're very likely to see the week long start to kind of puke them up into 44.50. But buyers who are sitting on the sidelines are likely to get more and more confident as it pushes down into the RTH VWAP and the RTH mid of yesterday, coinciding with the 44.50. This is a pretty good area to pick off another long and scale out into the 56, 57 and look for a pushback into settlement. And so this is this is where we're looking. Yeah, April 2022. We go way back. So that's how things are looking in the kind of bigger-ish picture. Um, Here it is in the TPO. Yesterday, we did have a trend day, but you could see that it traded back on itself pretty good. It left a few single print areas, nothing too terrible. Unlike what we had here on this squeezy breaky setup from Monday, where it just had nothing, and then it just exploded to the upside with very little counter rotation. Yesterday, as you saw in the price action, it managed to push through and pull and retest the price action structure before it pushed through, and then it managed to retest the price action structure before it pushed through, which is much better, much more fluid, much more concrete than what we had down here or down here. Still having weaker structures down below. So that's what we're looking at. Pretty quick 2-day balance here from the Fed and CPI, and then we've broken out of that balance, so we can be very confident, quite confident that the rally is likely to continue. We finished in the upper quartile of the range yesterday. Out of the initial balance was right down here. We finished in the upper quartile. This is quite bullish, and it's likely to continue as we are indicating that that we're not done finding sellers. Like, if we're done finding sellers, we would see a pretty strong reversal that finishes at the bottom. We had a chance at that on the Fed, but we ended up finishing right on top of the 2-day point of control there. That's quite bullish. So that's what we have. Here's well, let me show you the composite here. So we go way back. So we are way up here. See this? These 2 days, these two strong sell-off days back in April of 2022, we've cleaned up these weak highs. You see these weak highs? Can you guys see this, or am I like pointing at stuff that you can't see? Be sure that you're selecting 1080p for your resolution to get like the cleanest screen possible. I'm having to zoom out and show you stuff from the past, but you can see the tops right there. There. 4 days, and then we came back up, and we popped right through those tops to put in a high of actually 56.50. My roll adjustment's off by 2 ticks. It's okay. Popped through, and then it came back down. So we cleanly tested and held this area, and now we've taken that out, and that's why the 56.57 remains on my chart and is actually a low volume node from yesterday. And so what we've done is we've cleaned that up, and now we're on the other side of that. Okay, so now we're pushing the other side of this, and that area is 44.87. And where did we go yesterday? We went to 85.50. What was interesting yesterday is you had these massive gamma levels of 4400 SPX, which translates to 44, what was it, 44.47, I think, in the ES. So as the long from 25.50 moved into the 47, I was starting to get nervous there because of expiration coming in today, and these huge gamma levels there. The big 4400 strike in the SPX. I started to get nervous that there would be a lot of hedging, a lot of protection, in that area, and it kind of waffled around a little bit in that area for just a little bit, and it just pushed through, uh, evidencing the type of strength we're seeing in this rally. I mean, it's remarkably strong. This does not seem to me to be a bear market rally. This seems like the market is really redeploying cash into risk assets, and so we are cleaning this up, and that's 44.87. Then once we clear that, we move into the 4,500 right here. So you can see that on the profile right here, 4,500 and 4,503. 4,503 is the last kind of clear. 4,503, 4,508-ish is the last kind of acceptance area above the 4,500 figure, and that's what we're looking at today. And if we're trading currently at 44.85, we're talking about 15 points to the century figure at 4,500. It's not that much of an effort. Let's go back and look at yesterday. Yesterday, the overnight high was 45.25. The only trade I saw that set up, even though I talked about being long, I talked about the long in the trader bite here to set that up. There was nothing for me here. I mean, we had kind of an opening swing that looked something like this. Consolidate. We had a pretty good bounce above the 4,400 in the overnight session yesterday. That happened during the trader bite. And then during the trader bite, we continued to rally, and we broke the mid and VWAP and came right back to the point of control for the session. We opened right on top of the point of control. So this could go either way, right? More likely higher than lower, given the trend and the fact that we're breaking balance, so that you continue to break balance on the upside. And then it starts to break higher. I didn't have a chance at this. We got separation from VWAP and mid. There was just nothing here. The first opportunity to do anything was the overnight high. We had a pretty good kind of a collision right at the overnight high, 44.25, which is the strike price. We had a collision there. Then we broke through, and then we pulled back into that collision. Boom, that's a scalp long, at least a scalp entry long. And then from there, it's about managing the counter rotation. So now it's all about watching how does the up rotation go versus the down rotation. Up rotation, down rotation. We want the up rotation to continue to beat the down rotation. And then the price that I was talking about, that I was concerned about, was right in here, actually. Right in here, and you could see that as it comes in, the curvature of the rally kind of starts to peter out. So I issued a couple of warnings in Convergence Maven channel to say, hey, if you're long, this is a good area to kind of back off the risk a little bit. And then it finally breaks through, pulls back to that area there, the 47 or so, and then consolidates for a little bit. We expect noise in the mid-century, and then it continues higher in the afternoon. It was unrelenting. The rally was unrelenting yesterday, and then we ended up liquidating some of these longs into the close. But look at what's happening here. What we did in the overnight sessions, we pulled back right into this. Didn't quite get there, the 56.57 area. Pulled right back into the 59.75, and then we got above VWAP, and we've tapped on VWAP here, and then we saw pretty good. Look at those clouds of buying. We saw pretty good buying from the very large lots. Let's take a look, zoom into that. You could see here, overall, very large lots, kind of inactive, selling a little bit into VWAP, and then as soon as they started lifting, we had a lot of activity from very large lots. These are 100 lots on MBO data, reassembled trades basically on MBO data, pushing and we continue to push, this is very, very likely to continue to climb higher, and you're looking at 45.03 as the next key target. Okay, so it'll be hard. It'll be hard to short this morning. There's just not enough impetus to short. I know I went long with this, but there's a lot of movement and structure in the ES, so focus there. And really, it's about measuring pullbacks today. So as we look at the action this morning, we want to see, does it come back to yesterday's high? Does it tap through, get above, consolidate? That sets up a long. Be patient. Manage your emotions. Manage your sense of not wanting to miss stuff. And just, step back and continuously scan, as I do. Scan your bigger picture chart. Could be a half hour, 15 minutes, 60 minutes, whatever. Keep scanning your big picture charts so you're not tied in and zoomed in so much that you're getting knocked out looking for trades, with a point or 2 point stop. The volatility is too high for a 2 point stop, by the way, right now. Anyway, I'll leave you with that. I was going to do the whole where are you from, but I'm going to pass. We're opening in about 3 minutes. Good luck. I hope you gained something here today that you can carry with you for the session. And of course, as I always do, I ask you to subscribe to the channel. It's free. It helps it rank better. And then to like the video so more people can see this as they watch other trading related videos. This will pop up for them, and hopefully they'll gain something that they can use in the long run, rather than just learning to use an indicator. Good luck.